Hello, all, and welcome to FinTech Adaptation through Founder-Led Innovation with MassMutual, hosted by Chris Denson. I'm Kate Brummie, CEO of MassChallenge, and it's my honor to welcome you here today and introduce our dynamic duo. MassChallenge is the global network for innovators. We believe in a stronger future through collaborative innovation, and we work at the intersection of startups, industry, government, and academia to accelerate and extend the impact of entrepreneurship on our most important problems. We have now more than a decade of experience directly supporting high potential, high growth startups by connecting them to the resources, expertise, and network that research and our experience has shown are essential. We also have an awesome decade of experience working with industry partners to connect the dots between their innovation goals and the extraordinary talent and technologies happening in the startup space. In fact, MassChallenge FinTech was launched in 2018 with founding support from leading institutions like MassMutual, specifically to accelerate outcomes-driven partnerships between startups and enterprises to fuel innovation across banking, insurance, asset management, and other financial sectors. Look, I think it's fair to say we're in the midst of a global financial technology revolution. And at MassChallenge, we believe that effective startup collaboration is a critical piece of the innovation portfolio, and that startups and corporations together can do more to transform financial services than alone. So with that, I am thrilled today for today's conversation, which will explore how industry leader MassMutual is adapting to today's rapidly changing environment, including by embracing founder-led innovation. So with that, I'm delighted to introduce Mike Fanning, head of MassMutual U.S. and MassChallenge board member, and Chris Denson, founder of Crush Innovation. Knowing both Mike and Chris, I can say we will cover a lot of territory today. Chris, over to you.
I guess for starters, I would love if you can just kind of give an overview of what your responsibilities are, especially as we're talking about, startups and innovation and future trending and talking with Gen Z and, millennials and like, what are those behavioral things? But like, where is your set of responsibilities and experience come into that picture?
Yeah, great question, and good day, everyone. I'm not sure if where you are, if it's morning, like Chris, it's really early morning, or just starting here, but really excited to be here with you today. So, yeah, a little bit of my background. So, in essence, MassMutual is a 175-year-old insurance-based financial services company. So. We have operations around the world, but my primary responsibilities are in the U.S. And we have what you would consider to be a traditional advisor network, about 7,500 advisors, all 50 states, that sell both insurance and wealth management, but do it from primarily kind of a financial planning approach. So that business that we run has about 3 million customers, about 500 billion of assets, client assets under advisement. So that's kind of one sleeve. We have a separate set of businesses that I'll call institutional businesses that, in essence, serve large and mid-sized companies. So if you've got a pension plan or retirement plan at your company, a lot of companies want to focus on their business versus actually managing a pension plan. So we take over a lot of those liabilities. We do that in the UK. We own a company there, but we also do it in the US. We have another set of products that help banks and large companies basically manage, I'm going to say, post-retirement benefits. So bank-owned and corporate-owned life insurance falls into that category. And then there's a few other things that fall in there also. That's about 100 billion of assets in terms of kind of what we manage on that side. And then a little bit differently, we've got a worksite business. So we had actually been for a long time in the group benefits business. And we now have a business that serves, again, small to medium-sized businesses that allow employees that may have benefits at work, but also on a voluntary basis, they can buy things like life insurance or critical illness or accidents. So, that business has got about 5,000 small to medium-sized businesses, about 100,000 clients that are part of that business as well. So, in all of that, I've got responsibilities for product management, the technology that supports all of those businesses. So, So it's pretty comprehensive across the board.
I'm surprised you have time to be here with us today. That is a lot.
Yeah.
What's interesting is that, it's a 175-year-old company, right? And just a few years ago, relatively speaking, this was a business where you walk into an office, you sit down with someone, or you get on the phone. And as more and more automation and self-management come on board, and behaviors change and things like that, what are some trends that you guys are tracking when it comes to fintech specifically, and how people are engaging with the portfolio of things that you're responsible for on a day-to-day basis?
Sure. Yeah. Well, listen, I think as we think about and we think where the business is going. For us, it always starts with a little bit around demographics, and so just looking at it. And our average, by the way, our average customer in our core retail business is mid to late 30s. And so, if you think about particularly our core product, it's something that you buy maybe when you have a young family, you've bought a home, you're saving for, whatever the case might be. So that's kind of the target audience, but clearly the trends around, I'm going to say consumer finance, and the ability for consumers to do business more directly with a company. Has clearly been a big trend. So you've seen a number of big firms, whether it's on the investment side or even on the insurance side, really start to come in and try to, I'm going to say, disintermediate that old way of doing business, which was, hey, I've got to go to the office, or somebody's got to come to my office or come to my home to do that. And our view is very much that's going to change, but it's not going to go away completely. Particularly for the types of products and relationships are really important in this kind of business. But we always talk about the fact that what the clients want, and there's three things we think about. One is they want to know that they've got a relationship with a primary advisor in the firm that they're dealing with. The second one is they want regularly scheduled meetings. Now, define that meeting. It could be virtual, it could be face-to-face, it could be something else. And the third thing is they clearly want to have technology. They want to be able to do things either on their own with their advisor or in any way, shape. So that's kind of the backdrop we think about things on. So our view is that the technology enabled advisor probably is the winner. And the other thing that we see is just this consolidation of the number of advisors, particularly in the U.S., but I think you've seen this happen in Europe as well, where because the regulatory hurdles are getting higher, that the number of advisors and the number of firms are really consolidating. And in the U.S., there's something like 300,000 advisors. That's down probably close to 50% from its high a couple of decades ago. So you see this kind of, and oh, by the way, the population in the U.S. has grown dramatically. There's 330 million people in this country, 125 million households, and there's fewer people serving those households. And the only way to effectively do that is really to use technology.
Yeah. Well, you mentioned regulators, and in any technological or technology industry, you find that the industry moves at a speed, the consumer behavior moves at a speed, and then the regulators kind of move at a snail's pace. How do you bridge that gap? Especially in such a personally empowering industry when it comes to finance.
Yeah. Yeah, we've always tried to work with regulators, both at the federal level, because we've got SEC and federally regulated businesses, and then insurance is still a state regulated business, and so we have to kind of deal with 50 different jurisdictions. And I think we've always started with the premise that for 175 years, and by the way, MassMutual, you can't go on CNBC or whatever Bloomberg and find a ticker quote for the company. It's I'm going to say private company. It's actually owned by the people that buy the products we sell. So think about it like a co-op. So we and for 175 years, we've always thought about putting our clients' best interests first, because they're the owners of the company. We have no other constituent that we need to solve for, like a shareholder, like a stock analyst, somebody else. So we feel we've always had that alignment. We've been able to, I think, use that effectively with regulators because their number one priority, I think, is to protect the buying public, whether that's on the security side or the insurance side. So their mentality is, hey, making sure we're protecting. And the other thing I think their mandate is that making sure that the products are available, right, and that their constituents at the state or federal level have access to those products. So we try to balance those two things, right, which is, listen, the things that we do are incredibly powerful in terms of helping families, helping people, feel financially secure, which then makes them more productive to do all the things they need to do. So we try to work with, hey, we are on the same side of the table of wanting to protect end consumers and doing the right thing. But we also know that there's innovation needed because, you said it, right? Somebody coming to your house or you're going to your business to work with you on something is generally not the way people want to do business anymore. So, I think the regulators, clearly understand that, but there is a leaning towards making sure that companies are doing the right thing. But so we try to walk that fine line and work with them, rather than work around them.
Yeah, no, that's great. When you talk about innovation and kind of leaning into the future, there's a lot of collaboration that happens with startups. How do you vet, the startups and the founders that you're working with? I have a part two to that, but I'll let you answer the first part first.
Sure. So we have our approach has been, and as you think about, you wind the clock back probably to 2007 when these things were invented, right? When they kind of came to market, and that really kind of changed the game for us. And you saw it happen across a lot of businesses. Financial services was probably on the back end versus more consumer-driven, businesses. But we clearly started to see that. I think our first approach was, wow, we need to understand who's going to disrupt us. And kind of looking at it from that lens, and then trying to run as fast as we could not to be disrupted. And use, by the way, things like regulatory hurdles and other things, because it's not an easy business to navigate. And then I think, particularly could be for our CEO and the management team at the company, we said, rather than try to kind of fend off the disruption, we should just embrace it, right? And really look for opportunities. Back to my point that it's a really hard product to buy and understand. And we should be using every tool available for us to help consumers understand the products and build a relationship with the company. So our mindset changed from kind of being defensive to going on the offense a little bit and kind of embracing those. I think that the second thing is when we're looking for startups, particularly for a company like ours, it's I like to say they're kind of Fortune 100 ready, right? and that in many respects is never going to happen. It's just by definition of a startup. They're moving fast, they're moving agile. What we really like to see in a startup is somebody that is mission driven, right? And we think about our company, and the purpose of our company hasn't changed in 175 years. And we want to be sure we're working with people whose purpose is to do the things that we want to do, which is to help people secure their financial future and protect the ones they love. That's been the tagline of the company for centuries, and it will be. And I think that alignment of purpose, I think, trumps everything else. So we think about the old saying that kind of culture eats strategy for lunch, right? And that's a purpose-driven culture thing that they can fit within the organization, whether they're doing business with us as a third party, they eventually become part of the company, whatever form that takes. But they've got a kind of a cultural and purpose fit.
Yeah, no, I love the heart at the center of, especially, I think when society grows in a technological way, we kind of look at the tool and the thing and the shiny object, but not necessarily keeping the purpose as part of that process. So I applaud you for that. The part two is, I think there's we over glorify this idea of fail hard, fail fast. And I don't think your customers would like that. It may work for a Google or, another entity, for you guys, like I think the risk mitigation is a little bit different, specifically, even maybe within your own walls, right? Like there might be an HR focused startup that could be just great. Like let's see how it works. But in the fintech side of it, what are some of the parameters and guidelines you're working through?
Yeah, no, it's a great question. We and again, I'd separate it because the word fail is, you might imagine, all of the good things that come with a 175-year-old company. Strength, stability, reputation, brand, balance sheet, is the things that kind of hold us back from innovation and agility, right? Because it's really easy, by the way, because we've got a risk team, we've got a finance team, we've got a lot of people that are more than willing to say no on things. And so what we've tried to do is separate balance sheet risk, which would put the company at risk from a balance sheet, versus, I'm going to say, a consumer lens and what that does. And what we've tried to do is create, I'm going to say, startups within the company that allow us to do that experimentation. But it's really clear to the consumer. And if there's an advisor, now we do some things directly and we do some things through advisors, right? So we've tried to carve out, I'm going to say, that early adopter or really early adopter customer and be able to focus on new innovations and new ways of doing things with them versus trying to do that across the entire population of customers we have, because we just know that there's laggards in every population of every kind of adoption of technology, and there's people, hey, they really want it. And give you an example, we're experimenting with wearables right now, right? Is there a way to through a wearable device to get information around exercise, sleep, hope, stress levels, a bunch of other things that we could embed in future products that would lower premium costs for somebody that had good behaviors. And there's a whole lot of regulatory elements to that one as well. But listen, we know we've got a population of both our advisors and clients that love it. Like they sign me up, right? We got a lot of them that are like, no, I don't want to touch it, right? And so, so we're really trying to identify those pockets that we can do some of this experimentation.
Yeah, I love the wearables example. Based on how lazy I am, I don't think I get a good deal.
You look great.
What are some other areas that you guys are focusing on, right? I like that example, but you think about like artificial intelligence or Web3 or even the metaverse, right? There's these protecting digital assets, or are you so what is that lens? Maybe 2 to 3 examples of things that you guys are paying attention to and kind of actively pursuing?
Yeah, no, without it, I think I put AI at the top of the list, AI, machine learning, types of things. We were a pretty early adopter. And again, this is a great example where we've actually built I'm going to say, a mortality scoring model that we use for the company. But we also sell to other insurance companies in the United States. It's called LifeScore 360. And in essence, what we did is we took about 20 years of paper applications. So again, back in the 80s when I started, you would fill out a 40-page paper application. We would then go to your doctor and get up to 400 pages of medical records for you. That would kind of be packaged and sent to somebody called an underwriter. They would then basically read through all that material and make an underwriting offer for you on life insurance. And so we basically took about 20 years of history and digitized all of it. We took all of those paper applications, all of those medical records, all of the lab work, because again, this is another point of one of the things we're trying to solve, right? Buying insurance, at least in the U.S., is a pretty bad process, right? It starts with somebody coming to your house and says, get on a scale. And then they stick a needle in your arm to take blood. And by the way, the process goes downhill from there. It doesn't get much better, right? So what we were trying to do is if there were a way to capture all of that information electronically, build a model that would then automatically calculate that mortality score for the customer. We could do a lot of that underwriting without the scale, without the needle, without the back and forth with doctors and those types of things. So we've effectively been able to do that, but now really starting to think about how do we then personalize that experience for the customer. And that only happens through AI. that machine learning model gets better every single day, and allows us to kind of take a lot of friction out. So that's a really big one for us. Related and tangentially, it's just kind of data and the ability to manage and organize data in a way that we can use through that process and a lot of other processes at the company. So I put that at the top of the list. I think clearly things like blockchain are a huge opportunity for our industry. And we, again, as much as I'm going to talk about life insurance, I mean, we're a really big asset manager, right? And we do, we invest around the globe on things, and we still buy and sell products that have a 3-week settlement cycle, right? Imagine that in today's world. And we believe there's ways to use things like blockchain to basically settle trades. And when you see what's happening in the world today, one of the reasons a lot of trading isn't happening is because there's not certainty of settlement of a trade, right? So there's just huge opportunities in my mind, whether it's at the retail level with our customers and or at the institutional level to think about blockchain and ensuring kind of that privacy and the certainty of execution around transactions and the accounting of that. There's just huge applicability for some of those things. And I think the last one, and again, I would have said this before the war in Ukraine, is cyber. Again, particularly for a large institution, we show up with two really big things: our brand and our balance sheet. And customer trust is critically important in having a cyber event. And again, we view that as kind of just table stakes to being in the giant leagues, which we hope to play in. So the other thing with cyber is that one particularly is as we think about the events that happen, this is a place we love to work with small startup types of businesses, because when we think about cyber, if you're Microsoft or Google, every cyber criminal around the world is trying to penetrate those systems, and they're not going to be able to find a small startup in Boston or Charlotte or Chicago or London. And we like to plug those into our environment because they are, they're not on the radar screen yet. So we use a lot of kind of, I would say, smaller, newer vendors as part of our cyber suite. But that's clearly another one that we will forever need to stay on top of.
Yeah, probably number one, in many ways. The thing that stood out to me most in that statement, or that your response just now, is starting in the 80s. And I think there's something to be said about a mindset or practice, or something with you as an individual that's able to pay attention to and track trends. And what are your resources and learning or processes around staying informed and staying active? I think it's one thing in a lot of companies, they do find they read the same trades, right? But they may not act the same way. So how's your career shifted over time as you pay attention to, the exponential growth of technology and startups?
Yeah, no, it's a great question. And listen, I think it starts with kind of the old premise that, if change outside is faster than change inside, you're doomed, right? And so, I particularly for me, I've spent, a lot of time more inside the company than outside, but I would say the last decade or so, it's really been not even focused on what our traditional competition is. We get asked all the time, like, who are your competitors? And I think for a long time we've said, it's not the other big mutual companies, or it's not the other big public life insurance companies in the United States, because we think that there's been a major shift to, power being in the hands of the consumer. And so whoever's trying to get the attention of the end consumer, that's who our competition is. And oh, by the way, that's everybody, right? So, we've shifted from the, hey, XYZ company did this product, we've got to copy it, right? Or that type of thing. So we spent a lot more time on, I'm going to say, non-traditional competition, including fintech and fintech startups, and whether it's the Robinhoods of the world, because we've got a big wealth management business, or if it's the Ethoses and Ladders, which are more insurtech, focused types of startups that We see those as the competition. We see, private equity, who seems to have their hand in a little bit of everything, including insurance. And so, we see them as competitors, but clearly the big platforms, the Amazons, the Googles, the Apples of the world that are so much more consumer driven than I think insurance has been historically. We spend a lot of time thinking about those trends, more than anything.
Discernment is a word that pops up for me in that, especially when it comes to being a first mover or fast follower. And what's that decision like, right? If you see something like a trend popping up, like, are you going to be the first mover, or are you going to wait and see, and then, kind of like navigate the second layer of decision making?
Yeah, it's a fine balance. And I don't think it's that binary. I know for our firm, I think it's a little bit of both, but I do think the first mover, we clearly think that, particularly with data and tech, and that project I talked about of going historically back 20 years, basically is taking 1 million people that applied for insurance with us, and that's how we built that model. Our belief is that there are things like that once you get the lead, it's a sustainable competitive advantage. It's really a moat around our business. So there's clearly things that we think first mover advantage are really important on, because once you get that flywheel turning relative to data, information, the machine getting better, it just allows us to kind of spread the gap between it. And we've clearly seen it in that space. So we think that there's a lot of places where first mover advantage is really, really important. I think there's other places that, being a fast follower is probably okay. But I think particularly around data, the selection of mortality, the selection of longevity, it's again another business that we're in. But we take on pension plans from large corporations, every day, and our ability to basically understand the longevity of somebody. So remember, pension plan is, hey, I retire at, let's just call it 65, and the company is going to pay me $2,000 a month for the rest of my life, right? Our ability to actually underwrite that from a longevity perspective, using data, using analytics, allows us just to be that much more precise. We think that that's a durable competitive advantage as well. So, seeing how that plays through the pricing of the core things that drive our business, which are mortality, longevity, and morbidity, people getting sick, and really making those model better. So we think that that's, once you get that lead, it's really hard for others to catch up.
Remember the time there was a pandemic?
Yeah.
There was a lot of predictions on what types of behavior would change. Clubhouse blew up and then went away. There's something spiked, and then plateaued. What did you see in your industry specifically, that was new or surprising or maybe counterintuitive to what you might have been thinking? And
no, listen, I think that there's nothing like a pandemic to think about mortality. So, without a doubt, we had a bunch of tailwinds that happened, for us, and I think it became top of mind for people. So, I think the view of life insurance and the importance of life insurance, which has ebbed and flowed, and if we really go back for decades, right, the risk of dying has become much less important to clients than it is living too long. A little bit back to that pension example I talked about. So, we've clearly seen that balance of, hey, back in the 40s, I might have gone to war. We had a very industrial economy. I could have got injured at work. We didn't have things like statins that helped cholesterol and, heart disease and all of those things. When you look at the risk of dying, and oh, by the way, infant mortality, all of those things have just improved, and the quality of life has improved. So I think the mindset of people thinking about mortality is now much more around thinking about, do I have enough to retire and live on for the rest of my life? So now, that being said, I do think people now, there was a reminder that no bad things like pandemics happen over time. So I think there's been a pretty big mind shift. And that's across almost every demographic or socioeconomic, strata that we look at. So, there's clearly been that one. I think clearly we've seen it in our advisors. And again, most advisors and successful advisors are still working with clients and building long-term relationships, and the relationship is really important. I think what they figured out is that, you know what, using things like Zoom and other technologies is a way to actually enhance the relationship. So there's been a mindset shift in advisors, right, that they can be more productive and they can serve their clients probably better than maybe they even thought they could, because of the technologies that have really, really emerged. So I think that's the second big thing. And listen, I think the other one is much more I'm going to say financial markets, which is, rates have collapsed. Now they're up with inflation and other things kind of happening, but I think the ability to be nimble, and a little bit back to, in addition to building these mortality models I talked about, we also went back and the industry forever has basically used third-party providers to run policy administration, right? So think about it. Our oldest living policyholder has been with the company 9 years. I think they're 107 years old, right? So they've been with us since like the 1920s, 1930s, right? So, we've got systems that go back to the 1960s that we still run, and they're really kludgy. They're not that effective. So, we actually built a policy administration system from scratch, which we don't think anybody's really done in probably 40 years. But we think kind of building that de novo allows us to be a lot more flexible and agile. And so I'll give you an example back to first mover. With rates being so low, and this is getting really geeky, by the way, but there's a definition in the United States. There's a definition of life insurance that's prescribed by the IRS, right? And in essence, there was a 4% floor. So we had a guarantee that the value of your policy to cash value grew at 4% a year. Now, when rates collapsed, the 10-year went to 50 basis points. We were investing money maybe at 2.5. And I don't have to tell the people on the call here that investing at 2.5% and earning 2.5 and then having to pay 4 is not a really good business model over time. So, long story short, I think there was recognition of that, and for the first time since by the way, that rule went into effect 1984, and so first time since 1984, that floor got lowered to 2%. We were able to actually, probably 6 months ahead of the competition, change the rate in our products, because back to the legacy of those systems that go back to the 1960s, we were actually able on this new platform to actually change that rate before anybody else in the industry. So, I think that was the other thing, that this idea of nimbleness and the ability to iterate products fast to get that first mover advantage was another big aha for us. So, again, kind of, allowed us to kind of step back and think about, doubling down on the investments we've made here.
That's great. Look, we had about 10 minutes before the Q&A starts, so get your questions ready. And Mike will answer them, because I have zero answers, especially with that geeky example you just gave.
Yeah.
But I feel like I wouldn't do my job well if we didn't talk about cryptocurrency. And how that plays a role in, how people are looking, especially when we talk about like retirement, right? If I retired 10, 15, 20 years from now, what is your crystal ball telling you to do now around crypto and blockchain and, those all the sort of future forward means of exchanging currency?
Yeah, no, Liz, I think it's a great question, and just a little bit of background for us. We may have been the first large institution player, at least in the United States, to actually put part of our portfolio. So we've got in our insurance business, what we call our general account, we put about $100 million into Bitcoin a couple of years ago. First, probably large institutional buyer of the product, and a little bit back to trying to understand kind of the long-term trends of that. So we're a pretty big investor, first big institutional investor, we think, in the U.S. The second part of that is we clearly see that there's a place for this in our products. And I talked about some of those longevity products before. So we love the idea of, hey, if you want to take part of that in Bitcoin, so let's say it's a $2,000 a month payment, and you want to take $1,500 in US dollars and 500 in some other cryptocurrency. We'd love to be able to kind of do that. back to your earlier point, a lot of regulatory issues around that that we're working through. But I'll lean on, again, the fact that we've built this digital platform allows us to have that flexibility that we would not have in some of our other platforms. So, we clearly think there's a role in it. We think there's a role to kind of take it as a form of payment. So again, we're an investor. We think at the end of the day, consumers are going to want that as an option. And again, our mission and mantra is we want to meet consumers where they are with the technology that they need. We think that's a place that we'll continue to kind of focus on. We don't have a product available today, but teams are actively working on it. And by the way, if anybody has any great ideas, send them to me. You can find my email somewhere. but we're looking for product information. We've also launched it through our retail wealth management channel. We offer that to clients today. Again, one of the first large firms to do that in the U.S. As well. So again, we've got a pretty big presence there.
Yeah, and this is one thing you and I talked about before is you mentioned U.S. just now, and it reminded me this idea of globalization. Exchanging assets, currency, especially in the guise of the Innovate Finance Global Summit. How do you approach globalization? You mentioned a couple times like investments and things that were happening in other countries, but your consumers are everywhere in terms of their interest, travels, where they might want to invest. How do you account for fintech and the idea of globalization?
Yeah, no, that's another great question. So, and again, the majority of our business is in the U.S., but we have owned businesses and still own a business in China. We own 25% of a company in Hong Kong, life insurance company in China, and we've got a number of kind of assets around the globe, and we clearly see, quite honestly, back to the fact that adoption of fintech probably in some of those jurisdictions is way ahead of where it is in the U.S. So, we've been able to actually take that platform that I talked about before that allowed us to make those changes very quickly. We've got a version of that we now resell to life insurance companies in Asia. So, we see that kind of playing out as well. And for us, we think that business probably fits us better than running a domiciled insurance company in some of those places, but we clearly see the opportunities there to be able to do that. We also have a ventures arm, and which started back in 2017. We had a $100 million fund. We've made a bunch of investments, primarily in the U.S. across all the things we've talked about: cyber, payments, a number of other consumer-related fintech types of firms. But we've also expanded that. We've got now an office in London and an office in Singapore. So we are sourcing startups. The fund is now about $400 million. So we are investing in a lot of those jurisdictions as well. And listen, great. What I like to say inside the company, there's very few great ideas. We have some great ideas coming out of the four walls of MassMutual, but the great ideas are coming from around the globe, right? And the U.S. or our company does not have a lock on all of the great ideas that are happening. So, we're looking, through that ventures arm particularly to see that happening around the globe. We're either an investor in it. Some of them we partner with. We've got a number of places. Zogo Financial is one. You Do Test, Goal Setter. We've made a $1 million investment in through our Catalyst fund. So, we're seeing kind of this happen, and so we're either an investor. We're utilizing some of those assets as part of our infrastructure to run either our wealth or insurance business. And by the way, we've seen some that we've invested with that love the company so much that we acquired them. They became part of the company. So we've kind of try to take the pulse and make sure that we've got a presence in all of those.
Yeah, I love it. One of the things I think about a lot is this idea of acquire, mimic, or collaborate. There's as far as that goes. I think almost everything you've mentioned in the time that we've been together requires a massive amount of coordination, between departments and, where a lot of organizations kind of honing in on this principle of thinking and behaving like a startup, even though you might have tens of thousands of employees around the world. how does the inner workings of information and collaboration work to make sure that you can move at the speed of culture and get it right most of the time?
Yeah, no, that's a great question. I would say two different approaches there. One is there are things that we've done around innovation that we started inside the company, but in essence, we've spun them off. So Haven Life Insurance is actually probably one of the most recognized direct-to-consumer life insurance businesses in the United States. That's actually a MassMutual entity, but we spun it off completely separate from MassMutual, right? So it operates as an independent entity. And we provide legal resources, some of the regulatory things you've talked about, pricing. So we provide some stuff there, but we've let them run as a separate standalone entity. So that's one part of the approach, right? Which is, let them go out and do what they do best and innovate. And by the way, that was I think that was one we acquired back in 2015 or 16. It was called CoverPath. 5 people had a great idea. We acquired the firm. That firm is now based in New York and has about 400 employees, right? So that one's just kind of grown in and of itself. I think the other approach has been really working very closely with MassChallenge. One of the things that MassChallenge has brought to us is, and we created kind of the vertical around FinTech, but we're now seeing 60 to 80 startups a year come through that. And we have, in essence, we have one lead that works with me to kind of work with those startups. But as we go through the evaluation period, we've got literally every functional department at the company has a representative that's going and looking at some of these startups and helping us kind of vet that through. So I think we've created a culture that it's been, don't talk to me about it, no, I need to understand and improve my business. So we've got a big theme at our company is around continuous improvement. How do we get better? And so we've really integrated literally dozens, if not 100 or more people that are actively involved and working with MassChallenge, seeing what the startups are bringing. And we do it through this reverse challenge, right? Those people are actually coming to the table and saying, hey, I've got a problem and here's what it is. And then we get a reverse pitch from entrepreneurs on how they can help us solve those problems. So, any given cycle at MassChallenge, we probably got 100 plus or minus people involved.
We're gonna get into a little bit of advice because you seem like a wise person. If an organization is sort of mid-sized, or maybe even the same size as you guys, what advice do you give them to really start behaving like a startup and or collaborating with the startup ecosystems?
Yeah, but I think this is where leadership just kind of comes in. I think you've got to have, I think, an organization that is embracing this type of thing versus trying to, again, back to our mindset shift was defensive to offensive, right? So I think getting leadership to think about this as an offensive weapon, as much as it is, hey, we're going to stop the disruptors from kind of coming in. I don't think that's a strategy. They break down the wall, and if you haven't thought about it differently. So I start with kind of culture, I think it starts in the C-suite, and our CEO might be, I put him as the most progressive thinker in our industry by far, and thinking about it just as an offensive weapon. So I think it starts there. I do think that it starts with generally where things get hung up on working and collaborating is, I'm going to say this idea of kind of cyber and risk. And again, big, mid-size and large companies, it's really hard. The technology stacks are generally legacy and they're not digital, right? And thinking, getting your CIOs in a place that, and you're probably a risk and compliance team, particularly in FinTech, right? That you've covered those bases off, right? And that they're going to be plug-in ready to kind of come in. But I think that's the other place when we see things kind of stall, it's in that realm, right? It's like, it doesn't fit the compliance issue or it doesn't fit the technology stack that we have. And I think allowing your CIOs to carve out some space to try to plug some of these things in. And our cyber team, I mentioned before, has been the tip of the spear for us, right? They have, they've embraced it because it's a business necessity for them. And so they figured out a way to kind of bring this, and that's really helped us, quite honestly, of bringing other smaller, firms in and plugging them into the ecosystem, which are incredibly complex. So.
Yeah. On the flip side of that, right, you mentioned seeing 60 to 80 startups just via MassChallenge alone. Yeah. Where are you finding that some of the companies are missing the mark? Is there a common thread of like, oh, this is typically a missed thing? It could be a cultural thing, it could be a technological thing, it could be just like market ready. What are some of those things that you find?
Yeah, no, I think it's probably along the lines that I mentioned before, right? Which is maybe just not understanding the complexity in a little bit around the regulatory environment, either directly or indirectly through the company, right? That there's hey, we have this idea, we want to do this, but it's the gap between what is feasible versus what they'd like to do, and the lack of compromise, right? The lack of, hey, we know big companies need to move here and the startups need to move here a little bit. So I think it's this underpinning that, people put anchors and stakes and are unwilling to move off of those stakes. And by the way, I'm a big believer. One of the things I love about working with startups is the conviction, the optimism, the passion of trying to move the industry there. And I think, sometimes that's just hard to do as quickly as people want to do it. And I think there's a level of frustration that happens of not being able to change the world like overnight. and sometimes these things just take a little bit of a while. So I think it's that mindset of wanting to move fast, wanting to move, quickly to kind of capitalize on the idea, but unwillingness to kind of compromise and understand that landscape is complex.
Yeah, I find like there's, often, and that just kind of comes down to a soft skill, like a malleability of sorts, and an ability to like get outside of your own lens. What have been some of the things that, you've learned? I'm going to go like a little bit soft skill for a second, that you've learned or personally inspired by when you are encountering, startups through an accelerator or any other means.
Yeah, no, listen, I think for the most part for us, it comes down to this alignment of purpose. And I think the thing I always start with is, with many of these things, it starts with kind of talented people. And it for me, it always starts with kind of the founder or the small team that's kind of started this thing and the conviction and optimism and passion behind their idea. So for me, it always kind of starts and ends with that one. So, I don't know. I think that, we're in this is all about people and talent in my mind. And so I think kind of seeing that talent is clearly kind of what separates, the ones we want to work with and the ones we may want to take a pass on.
Well, I certainly want to work with you again. I would love to do this again.
Yeah.
But thank you for joining us.
Yeah, great to be here.
This has been incredible. And thank you to MassChallenge for putting this together. Thank you to the folks at Innovate Finance and the UK FinTech Week for allowing us to do this amazing conversation. And please, if you have any questions, Mike will be available. You can find them through the internets of the world. And we will talk to you guys again soon.